Hello YouTube and welcome to my December dividend portfolio update. So this is the last month of my update on this, trying to make 50k in 5 years, so that's where we're at. So starting December, start off like 22.2, put my money in sort of middle of the month, being Christmas and all, and then it was a fairly flat month, it didn't really go up much, up and down, up and down. If you followed it through there, it's sort of profit loss, profit loss, profit loss. So not the best month in the world, but December never is. Excuse me. So then looking at the top five, no real change there. Well, S&P 500 went up a little bit, but oil's been still having a good run, and Rolls-Royce is still on a blinder. So let's look at the portfolio overall, and we'll go fairly quick. I'm not going to talk about anything because it was flat. Nothing really happened in December. But if you want to see where I am, or if you're following along, just pause the video on these. But yeah, nothing really to write home about because it was a flat month. I'm hoping that 2026 is going to be the year where things don't crash. That's the best way I think of that. Yeah. The FTSE. I know it's January news, but the FTSE 100 did achieve 10,000 points, which is a new high. So anyway, so that was my companies as an overall. Not too much to really sort of write home about. But let's have a look at the dividends then, as we get into this final bit. So in December, I put in £350, which gave me a final balance for the year of 17,500 and interest of £53. So let's see how the dividend portfolio balanced against that. So just a quick run through the dividends. So 3M paid out 97 pence, Amflac paid me out £1.21, AGNC paid me out £2.44, Google paid me out 22 pence, Archers down in Midlands paid me out £1.31, BP paid me out £11.74, which is like a good little bonus there for the end of the year. Coca-Cola paid me out £1.17. Diageo paid me their final payment of £5.27. Ford, which is a new one to the portfolio this year, paid me out 90 pence. Gladstone Land, that paid me out £2.10. Horizon Technology Finance paid me out £3.24, which is pretty good considering like beginning of the year. That's sort of almost doubled. Has doubled since January. HSBC paid me out £4.27, which is really good. IBM paid me out £1.74. iShares, my Morgan Stanley US bonds paid me out 89 pence, which is slightly disappointing. Johnson Johnson, that's actually had a good year actually, since that was negative and now it's in a good profit. But that paid me out £1.42. My new equity fund from JP Morgan, that paid me out £1.65. So yeah, okay, it's bobbing along. LTC Properties paid me out £1.37. So a fairly standard year for them. Mainstream Capital, that had two payments from them, ended up being £2.09. McDonald's, that paid me out £1.03, which is good. Meta Platforms paid me out 36 pence. So again, another nice steady one of my growers there. Quite pleased they're paying out dividends. Microsoft paid me out 28 pence. Pfizer paid me out £2.78, which is not bad. And then I've got my PIMCO's US bonds again, so they both paid me out exactly the same. I think that's the first time that's ever happened. £1.11. PPG Industries paid me out 94 pence, which is okay. Prospect Capital paid me out £4.12. So you really can see, because I've been pumping money in there, so that share price has dipped considerably. Me pumping money in there, trying cost average now is really reflecting the dividend payments I'm getting. Royalty income that paid me out £2.78, so sort of fairly standard across the year for that. That looks worse than it is because of the exchange rate. What else? Shell paid me out £8 on the button, which is good. Stag paid me out 58 pence, so fairly steady year for Stag. T Rowe Price paid me out £2.24. So this is one company I sort of moved to the Wall Street pie with my friends, so get slightly more investment now than everything else. Trig paid me out £5.27. My 24-month select fund paid me out £1.69, which is okay. Unilever. So Unilever did a split in December, so they split up Magnum ice cream. So I sold them about 3 days after I got them on a slight profit, but yes, that's what they've done. So, but they still pay out dividends. That's £1.78, which wasn't bad. And then my Vanguard funds paid out early because they have been paying out late this year, and then they've gone back to their normal end of Q month payment. So the FTSE 100 paid me out £1.18. My All World High Dividend Yield paid me out £2.61. Emerging Markets paid me out 78 pence. The S&P 500 paid me out £1.50. The UK Gilts paid me out £1.21. And then lastly, well not lastly, WW Granger paid me out 50 pence. And then lastly, Whitestone REIT paid me out 59 pence. So that gave me a total of £86.46, which is 30 quid more than the interest I got. So before we go into the numbers, let's have a quick look. Let's go to the numbers. So my fund value was 22,750. So what's that? £5,000 more than the ISA. So that's positive. So over 5 years, I've made £5,000 more than I would have had in an ISA, which is really good. So it does show that over 5 years, investing in the stock market will pay more than in interest on cash, even though for at least 3 of the 5 years, we've had exceptionally high interest rates that we haven't seen for 2 decades. So yeah, so that's really strong indicator that investing in the stock market will pay you more than just sitting on cash. So total for the year dividends was 740 quid, which wasn't bad. With the recalculation of yield, that was a yield of 4% on cost and a yield of 3% on value. Yeah, I made £2,000 this year in just capital growth, which is really good. Yeah, so just under 5k overall. So let's have a quick look at then at the top, how the tops went through. December not picked up again. It's really good. But let's look at top 5 dividend payers then. So number 1 is still BP. Number 2 is Prospect Capital now. It's really good. Okay. Number 3 Shell. Number 4 ANG. And number 5, I'm going to say, is HSBC. It's not bad. So go over to then the front sheets, have a look at my trending graph. So that just made the exponential growth line this month. So over 5 years, you can see a massive change in how much dividends I get each month. So it's really, really good. So again, it's very encouraging to see that. It's really a positive thing that helps you keep investing. Just watching your dividends grow each month. Again, if we look at that on a year-on-year scale, so about £200 more than the previous year. So my first year, second year, third year, fourth year, fifth year. Nice to see that grow. And if we look at it on a monthly scale, each year, every month, bigger and bigger and bigger, which is really good. And then also then we've got best month. So the best months has always been September and then December. Oh, that's strange, but June's always been good. So they're the best 3 months. So let's have a look at the final predictor sheet. So would I make 50k in 5 years? No. So it's still looking at sort of 10 years, 10.5 years. So disappointing. Well, not really. So, but we'll get on to that in a minute. So let's look at my targets then. So I had target predicted using the wrong dividend yield of £871 and then got 740. So that's a red for that metric. But capital growth predicted to be £500. It was actually over £2,000, which is really good. And the fund value would have been £20,593, and we actually got to 22,700. So smashed out of the park. So why didn't I make 50k in 5 years? Well, taking the positives, I did beat cash. So, and I did get quite a lot of money there. So £22,000 not to be sniffed at. But why didn't it work? Well, Trend 212 gave me an opportunity as a platform to buy shares and stocks with no commission. So using my previous broker, that would be sort of £10 a month really. So it's not, and I don't have a lot of money. I don't want to invest big money. So if you're paying £100 a month and you've got to pay £10 in fees, that's quite high. So Trend 212 give me that opportunity to do that, to really experiment with buying different stocks. So that's what this is all about. Probably bought too many, and I probably didn't realise that till real year 3 in. I thought then I tried to shrink it down. So I think if I'd have done sort of 15 stocks with this experiment, I could have made 50k. I mean, if you just go back to look at them. So if I'd have picked, let's say, my top 15 there. If you look at those, I would have made 50k if I just focused on putting money in them. So yeah, I could have done it, but reasons it failed, too many too many too many companies. So again, am I disappointed? Not really. So the whole point of this is could you get a deposit for a house through investing? Is it better to invest or save? So I'm still saying it's better to invest. So with 22,000, that's the average UK price, house price is about 240,000 ish, 250. So you pretty much save a 10% deposit over 5 years. And that buys quite a nice house, near where I live anyway. So I don't know where you live, but yeah, that'll buy you quite a nice house. So there we have it. All in all, this is the end of this one. What I'm going to be doing next, so we'll take a little bit of time out just to sort this portfolio out because I'm probably actually going to move other investments into Train 212 now. Now this is done because I quite like this ISA. It's a good platform to use, and I've got some stuff outside of an ISA I want to get in, so I'm going to do that. Once I've got that sorted out, what I'm likely to do is what I want to do a UK versus US pie. So I'm going to want to pick out 4 companies plus an ETF. So and the rules of that are going to be so I've got to pick one that picks out in each month. So month 1, month 2, month 3 of each quarter, and then one monthly payer, and the ETF. So either the FTSE 100 or the SP 500 in there with that pie. And then we're going to see over a time period which one has the best growth, which one has the best dividend returns, etc., and see which one performs the best. That's what I think I might do next, but I've just got to get it set up. So first of all, I'm going to sort this portfolio out, get rid of everything that I don't want, and get that set up. So anyway, guys, I hope you've enjoyed this little series, and please give me a thumbs up. Cheers, guys. See you next time.